right? One of the things that's attractive from an intraday trading perspective on this is a structure move, because whenever we go into consolidation like this and we go into a range, what I look at are the highs and lows for certain trading opportunities. And one thing that's very attractive to me just looking at this on a daily, you can hear the ducks going over, is this big bearish move smashing the low here, right? So that immediately I know what that's going to look like on a low time frame. We're rolling off a cliff. And whenever we roll off a cliff into previous support, that is a really, really nice setup for me. Why? Because I know that we don't roll over forever. And if we've had this strong rollover and we're going into previous support, the chances are we're going to catch a little bounce, even if it's momentary, before we roll over and break the lows. So as you can see on the 60, we've just rolled over, right? We had a little pregnant pause here, and then we just kept rolling over. And now we're approaching, let's just bring this down, this little structure support zone down here, right? Where we've had 1, 2, 3, 4 tests, and we're pushing into that. RSI is going oversold. Conventionally, it's considered oversold at 30. We're down at around 12. Okay, so that's a great sign. Now what we're looking for is, I mean, depending on how aggressive you are, you could just buy this up, or you could wait for a 3-bar reversal, which would mean you wait for the close of this candle, then you wait for a doji or a low test wick, and then you wait for a higher close, or you could just wait for a doji, or you could just wait for a low test wick candle, or you could just wait for tweezer bottoms, right? Or you wait for a double bottom, and you can wait for a double bottom on a lower time frame. You could go down to the 15 and get a double bottom there, get your stops in below structure, and then get your targets in. Now, in terms of target taking on this particular setup, it's not the best, because I want a path of least resistance. And the least resistance, of course, is going to be this previous structure support level here. So if I just bring on my arrows and I just draw an arrow in here, okay, I don't know why it changed this to a heart. I really don't know, but if I show you here, this is the path of least resistance. So if I'm getting long somewhere in here, my target, I don't want to be fighting through that. So I know my target's only going to go here. I'm not going to be greedy with these types of setups. So my stop loss really needs to get really tight below this major low. Or if I'm going down onto a 15-minute time frame and I can get a double bottom there, then the double bottom becomes the structure. Therefore, an ATR-based stop below the double bottom, which isn't as protected as the higher time frame stop, but it still gives me a better reward to risk. And this is a prime example of a stop loss strategy where you have to be, willing to be wrong and then get back in maybe, or you build it in a way where this is your first chance entry so that you capture more moves because you don't miss the trades. Because sometimes if you're more conservative, you're going to miss trades, right? If you're less conservative, you're going to get more trades, but you're probably going to be wrong. You're going to have a worse strike rate. So it all comes down to your personality and your preference when you're building a trading system, which is the beauty of trading. You can build it to suit you as a person, which is like unlike most standard conventional businesses, is very hard to do that, or people don't tend to do it because they make lots of mistakes. But with trading, you can build it around you. But even if you just get it, 1-to-1, it's your 1.1 to 1 at best. That's still a decent quick in out, snag a few pips on a high probability move, and you can see that price is decelerating now. We had this, let's zoom in on the kind of anatomy of these candles and see what's happening, right? Look at that. Perfect example of what we call deceleration. We had this strong bearish move, then we had a less strong bearish move, smaller candle, then an even smaller bodied candle, and then an even smaller, and then a smaller, and it's kind of curving off. It's rounding off as we approach. Look at that, smack bang on the top of this structure zone. So That is all because structure leaves clues, support, previous support is likely to be support again. And there's a perfect example of that. So you either get in aggressively now or you wait for the double bottom. But either way, there's a nice quick in-out move there that could potentially be on the radar later on. So we'll keep an eye on this and see how it goes. Just an update on this trade. Down on the 15-minute time frame, we actually got a retest of that structure level. If you look on the 60-minute time frame, you see we have these really nice hold. A couple of ways you could have entered this. One is waiting for the rejection candle and then placing a buy stop order above the highs. If you got in on this candle, you may or may not have been triggered in, depending on how many pips you front run. If you got on this candle, you probably would have been triggered in. Or if you used the lower time frame setup, which was a retest, and there's actually a 2618 here as well for those of you who, for those of you who are day traders here. Go down to the 5 minute, you had a retest and a violation of the retracement, and a pullback down into the 618, which is a 2618 setup. But nonetheless, you ended up getting in here. Okay, so this is pretty much where we're trading at markets still at the moment, so not too much movement yet. I think this will come alive in the New York session. As we go into the New York session in the next couple of hours, at the time of this recording, it's 11:30 UK time. By 1:30, if this is going to play out, it will play out then, usually. The stop loss is down here at 63.60, and the target is front run a little bit below where we initially analyzed the resistance, right? Because the reason for that is because that level is right at that 64 flat level. Whenever we're bang on a flat level, I like to get a couple of pips below that. So 63.98 is the position for the target, and that still gives us a nice 1.8 to 1, almost a 2 to 1 reward to risk trade, looking like this. You know, these are the actual targets and stops. So good demonstration of a structure-based setup. The other pairs aren't as attractive. This is the high probability one. So yeah, watch it play out. I don't place trades in hindsight and post out my winners only. This is actually what I'm doing. So hopefully you get value from that. And let me know in the comments how you will trade this pair, or if you're looking at this in a different way. And until next time, have a great rest of your day. And yeah, be good in the markets.